For some time, I've been warning investors that there's potentially going to be problems with their bonds and or bond funds. And the reason being that interest rates are very, very low right now. We're at all-time historical lows. And when interest rates go up, the value of existing bonds go down. So we've been through really a 30-year period where interest rates have done nothing but go down. We've had little peaks along the way, but down, 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 down. And so when an investor goes and looks at the historical returns of a bond fund, they'll go, oh, look, these returns have been very good. And clearly, we've had some turmoil in the stock market, and so the returns on stocks don't look very good. And investors oftentimes invest with a rearview mirror. And so there has been a tremendous amount of money that has flowed into bond funds. In fact, over the last 2 years, there's been about $460 billion that retail investors, individual investors, have put into bond funds. What's interesting about that number is during the 2000 through 2002 tech bubble, individual investors put about $489 billion into stock funds. So we're approaching the kind of dollars that were in tech funds now in bonds. And I think that a lot of those people don't really understand that they can lose money in bonds. So it's very important in this kind of environment that you own bonds that have short durations, that is, shorter maturities, because when interest rates go up, the bonds that are the longest will suffer the biggest losses. The bonds that are shorter will maybe suffer no loss or very minor losses. And I think it's one of those times when you have to be very, very careful. Now, I'm not saying that interest rates are going to go up tomorrow and that bonds are going to lose their value. I don't know when it's going to happen. What I do know is that rates can't go down from here. So the only two options are that they either stay the same or they go up. Right now, when you buy bonds or bond funds, you have to be just as worried about not losing money as you are about the income that you get from those bonds.